Want to go through a quick article in here that came out on Friday. Canada's unemployment rate jumped 6.1% as job growth stalls unexpectedly. Economy sheds 2,200 jobs. I want to go down to, they were expecting, Stats Canada reported Friday on about these figures, excuse me, missed the expectations for a gain of 25,000 positions and a jobless rate of 5.9%. What blows me away is how can they not expect jobs to reduce? My brother's in the food business, calls on a lot of fast food chains like McDonald's and Burger King, stuff like that for his position. He's always asked them, what's going on in your business? And they says, you know what, Mike? We used to see big margins in the combos. They get the pop, they get the fries. Now people are coming in and having a sandwich. So at a low-cost food provider is seeing the effects of this economy is going on. And we all know the price of groceries every time we go shopping. I can walk out with an armful and it's $100. So I think there's more pain coming. And if we take a look at this graph, 2022 is pretty good. Even bit of 2023, we had some good job numbers. Looking for the last few months. This is 2024 in here. It's going up, folks. So we're going to see some rate cuts, and I think we're going to see them quicker than we really think. And I really think there's a lot of cracks in the economy. I think there's a lot of uncertainty in the economy. And every time people go to the pumps, I know I do. I feel the pain. It cost me $30 more a fill up on my truck. I remember 6 weeks ago at Costco, the gas was $1.25 or 29. Of course, I filled up. It's over $1.60 now. It's $30 more a fill up. The U.S. reported job growth too, but they had growth. I want to pull their numbers up, which, well, let me find it here. I think they had 300 and some thousand. Yeah, United States released at the same time, so the country added 303 jobs, beating estimates. Economy is super strong now. They don't have the taxation we have. So, what does this mean for the real estate market? There's a few things what it means. You've heard me talk about a housing crisis, and people are going, well, I don't see it out there right now. I see things sitting in the market, but it's not that. It's the bigger picture. We are going to see, as this come true, as soon as we start seeing rates come down, and they're coming down, I'm telling you, they're going to come down, you're going to see more people return to the market. More people will be able to qualify for homes today. You'll probably see some people trading up. There's a lot of families that have outgrown their homes right now and need to trade up, but they can't afford the payment. They can't afford taking on that extra debt, taking on more monthly payments. So they're sitting still. I don't think we're going to see a big drop, but I'm going to tell you, we're going to see 25 basis points, I think, by June. And so do a lot of other people think that as well. What else I want to cover in here? March job losses following a slower pace of hiring than population gains over the past few months may help convince policymakers that there are enough forces to keep inflation on a sustained downward path to the 2% level. Well, I don't know. I mean, we just got a carbon tax hike on April 3rd, and we're going to see more effects of that. It's coming. The cracks have been emerging within the Canadian labor market suddenly got a lot wider, which they have gotten a lot wider. Want to see some other ones. Oh, here's Tiff, Bank of Canada leader, and his officials held the key rate policy steady at 5% for a fifth straight meeting, acknowledging progress on inflation while reiterating that it's too early to consider easing. Well, it's coming, folks. Said that there were signs of wage pressures may be cooling as labor markets have continued losing gradually. They have, and we can see it on the chart. I just showed you. Ultimately, today's data confirms that the Canadian economy isn't as strong as official GDP data and the Bank of Canada are making out. And the sustainable rate cuts are needed to avoid more sinister unwind. That's the problem. Now it's going to become a spending issue. So now they're going to have to change platforms or footings and say, hey, how do we stimulate the economy now? Well, we know how they stimulate the economy. They are going to lower rates. That's what's going to have to happen because people are under a lot of pressure. Again, this is just the Bank of Canada stuff. The rise in unemployment rate in March was driven by an increase of 60,000 people searching for work on a temporary layoff, which brought the total number of unemployment people to 1.3. The majority of people who were unemployed in February also remained jobless last month, indicating a period of greater difficulties in finding work. I don't know if it goes through where the job losses are, but I'm sure it's at restaurants. I'm sure it's at retail, furniture stores, any large, consumer spending places. Job losses were held to accommodate food services, which saw employment fall by 27,000. So here I'm right. Wholesale and retail trade, as well as professional technical services, also shed jobs. Healthcare and social assistance. Construction saw the biggest employment gains, but construction, that's a given, right? We're coming into a spring market here where those gentlemen and gals are back to work. So we'll see that. So I think we're going to see a rate cut sooner than we think, folks. We'll see what happens. Enjoy the day.